In the past couple of days, the war in Iran has apparently restarted in earnest. Both the US and Iran have traded strikes and disavowed diplomacy, with Trump saying the recently agreed Memorandum of Understanding is over, and the Iranians describing further negotiations as futile. Unsurprisingly, the Iranians have reacted by, once again, declaring the Strait of Hormuz closed. This has pushed oil prices up a bit, but not by that much, which might explain why Trump sounds so confident about restarting a war that he was apparently desperate to stop only last month. However, in this video, we're going to explain why Trump's confidence might be misplaced, and why a non-linear oil crisis, in other words, a sudden spike in oil prices rather than a gradual increase, looks increasingly likely. This map shows all of the places Trump has launched military offensives since returning to the White House last year. How did we reach this point? In the latest issue of our magazine, we run through a timeline of Trump's military chaos around the world. That's just some of 80 pages in the magazine, because there's more in too long than you'd expect. Purchase your copy by clicking the link in the description. So let's get straight into it. As we see it, there were at least 3 reasons to think that a spike in oil prices is now looking increasingly possible. The first and most obvious is that the war in Iran has apparently restarted, and the global oil market is more fragile than it first appears. We covered this in detail in last week's video, but the TLDR is that the main reason that global oil prices didn't skyrocket after the Strait of Hormuz was closed last time, as many people expected them to, was because the world went into the war with unusually well-stocked inventories, and was able to draw them down at record rates to increase supply, thus keeping prices relatively low. But this obviously couldn't go on forever, and after a couple of months, most inventories were running dangerously low. Trump actually made this explicit at the G7 summit last month, when, in trying to justify his deal, he claimed that the world was just 4 weeks away from running out of oil.
A lot of money. That's why the world is okay. It's liquid, it's fine. Also, we run out of reserves in about 4 weeks. You know, there are reserves all over the world, and we would really run out, and there'll be a time when you wouldn't be able to get it, and you want to see bedlam?
Unsurprisingly, stockpiles haven't had time to recover in the month or so since the ceasefire was announced. In fact, the most recent data suggests that countries have actually continued to draw them down since, presumably in an attempt to bring down global oil prices as fast as possible. This means that we're going back into a war with depleted stockpiles, which means we have far less of a cushion to absorb any Hormuz-related drop in supply. The second reason we think an oil price spike looks increasingly likely is expectations. In short, one of the other big reasons that oil prices didn't surge during the last phase of the war was that the markets basically expected Trump to chicken out. In other words, they basically bet that Trump wouldn't actually tolerate a severe or prolonged surge in oil prices, both because it would lead to higher prices at the pump in the US, which would make him very unpopular with American voters not far out from the midterms, and because, thanks to AI-related uncertainty, the markets are looking very nervy at the moment, which means that any sort of bad news tends to lead to significant downward movements. The markets thus concluded that, if things actually started getting bad, Trump would chicken out, as he had done in the past. This meant you didn't really see a desperate rush for oil futures like during the previous oil crises. For context, when people talk about oil prices or Brent crude, they're usually not talking about what it actually costs to physically buy a barrel of oil right now, which is something that most traders don't do. Rather, they're usually actually referring to the cost of what's known as a near-month futures contract, which basically says you'll get a barrel of oil in a month or two's time. This is what most people trading in the oil market actually trade, because it means that, as long as you offload your contract in time, you don't actually have to receive a physical barrel of oil, which most traders don't want to do. Anyway, in previous oil crises, everyone would rush to buy up these futures contracts to guarantee access to a barrel of oil, thus pushing up the market price of oil. This time around, however, while there was some of this, hence the jump in oil prices once the war kicked off, lots of traders instead went and just bought insurance, which meant that, on the perceived off chance that Trump didn't chicken out and oil prices did genuinely spike, they would be financially compensated. This speaks to another reason that the markets were able to cope surprisingly well. The insurance market for oil is just way more developed than it was a few years ago or decades ago. During previous crises, the only way for traders to hedge their bets was to dive straight into the futures markets. The insurance market just wasn't well developed enough, which pushed up prices and created a sort of self-fulfilling price spiral, because higher prices meant more people rushing into the futures market to guarantee access to oil, pushing up prices, etc. Anyway, the point we're trying to make here is that people expected Trump to chicken out, which is one of the reasons they went for insurance rather than futures. The problem here is that the events of the past week or so strongly suggest that Trump has decided that the costs of chickening out and accepting an embarrassingly one-sided deal outweigh the midterm and stock market related costs of restarting the war. Furthermore, the fact that the war has restarted reduces the chance of another ceasefire, both because it proves that the last ceasefire wasn't sustainable and because it will erode whatever trust was left between the two sides. If market expectations adjust accordingly, we should expect oil prices to spike faster this time. The third reason on our list is that there's another war wreaking havoc with the energy markets at the moment, namely the war in Ukraine, where for the past month or so, Ukraine has been striking Russia's energy infrastructure. Most of Ukraine's strikes have targeted refineries, which process crude oil into usable products like diesel and gasoline. But in recent days, Ukraine has expanded the scope of its attacks to include Russian tankers in the Kerch Strait, which links the Sea of Azov and the Black Sea. All in all, this has cut Russia's diesel production capacity by about a third, with significant drops in gasoline and jet fuel too. This is having a significant impact on global markets, not just because Russia accounts for a significant fraction of all refined products, but also because, in an attempt to keep domestic prices low, the Kremlin has banned exports of certain refined products, including most notably diesel, where Russia is usually the world's second largest exporter. All in all, the point we're trying to make is just because we avoided a sudden spike last time, doesn't mean we'll avoid it again this time. Now, as you're probably aware, it's kind of impossible to avoid talking or thinking about the big players that control our world, much like the ones we've spoken about today. But it's not just the government leaders that impact our day-to-day life, it's also the big companies and how it's becoming increasingly difficult to avoid their influence. So, I bet you're wondering how you can start taking back that control, and luckily we have a simple solution for you, and it starts with your email. While it may seem insignificant, your email is extremely personal to you, and it's important to keep hold of what's yours, and thankfully Proton Mail will help you get that control back. It's a private, secure alternative to big companies like Google, and will give you everything you need to be productive, all while keeping those pesky ads away from your inboxes. From preventing dangerous phishing attacks with their FishGuard protection feature, to protecting your identity by alerting you if your email has been sold to the dark web, Proton Mail has everything to keep you safe online. They also offer end-to-end and zero-access encryption, meaning your email truly stays private, inaccessible to advertisers, trackers, and even Proton itself. This means your email and your information stays safe and secure. No more ads, no tracking, and no profiling, giving you back the control you deserve. Making the switch doesn't have to be a hassle. Proton Mail's easy switch tool lets you move your emails and contacts from your current provider in just a few steps. You can even connect your Gmail account and receive and send messages from it directly in Proton Mail, while you transfer everything over at your own pace, so there's no pressure to switch all at once. So, start using Proton Mail for free today by using our link at proton.me/TLDR, and you'll be one step closer to a fully protected online experience free of data exploitation.